You're welcome to my channel. In this video, we are going to be talking about royalty accounts, which is a subtopic under specialized accounts. Royalty. Royalty refers to a periodic payment to the owner of an asset for the use of his ownership rights. It may also be defined in other words as a remuneration payable to a person in respect for the use of the asset, calculated with reference to quantity produced or sold as a result of the use of the asset. The remuneration that is payable to a person in respect of the use of their asset. And it can be payable upon production or sale of the asset. And this periodic payment arises in three circumstances. The first one is when there is extraction of minerals from the ground, then publishing books with the permission of the owner, and then use of artistic work, e.g. music, movies, etc. Then the three principal forms of royalties. We have mining royalties, as a result of extraction of minerals from the ground. Then patent royalties, as a result of publishing books with the permission of the owner. Then lastly, copyright royalties for the use of artistic work, e.g. music, movies, etc. Mining and patent royalties are payable on production, this and this, whenever you produce or whenever you extract something from the ground, from someone's ground, you're supposed to pay them. So mining and patent royalties are payable on production, while copyright royalties are payable on sale. This one, whenever you sell someone's music or movie, you're supposed to pay them. They're payable on sale. Then any lump sum. Lump sum is something that is whole, that is not broken into pieces. Any lump sum amount paid for the use of an asset is never called royalty because it's a capital payment. So in royalty account, we have two parties, and that is the landlord, also known as the leaser, and then we have the tenant, also known as the lessee. The person who asks for the right to use the asset is called the lessee or the tenant, and then the person who gives the right is called the leaser or the landlord. So let's look at some important terms in royalty accounts. And the main three. The first one we have is minimum rent. Minimum rent, it's also called dead rent, flat rent, or rock rent. It's the minimum amount that must be paid by the lessee to the leaser in any particular year, even if the lessee has not derived any benefit out of the asset. That minimum amount that must be paid by the lessee. We say the lessee is a tenant. To the leaser is the landlord in any particular year, even if the lessee has not derived any benefit out of the asset. So here the landlord sets a particular amount and pays like every year I'm not supposed to receive any amount that is below this, any amount that is below 1 million. So even though you do not derive benefit out of the asset, you're at least supposed to pay him 1 million. And that's what we call minimum rent. Then the second term is short working. Short workings is the excess of minimum rent over the actual royalties earned by the landlord. The excess of minimum rent over the actual royalties earned by the landlord. So in some particular years, maybe the actual royalty that you're supposed to pay to the landlord is like 900,000. 900,000, but you already gave you a minimum rent that is not supposed to receive any amount that is below 1 million. So you are supposed to get the extra 100k from your pocket. You top on the 900,000 that you were supposed to receive so that you give him 1 million. And that 100k that you get from your pocket is what we call short workings. Short workings is the excess of minimum rent over the actual royalties earned by the landlord. Then we have recoupment of short workings. Recoupment of short workings refers to the recovery of short workings in a period where the lessee attains excess in royalty over minimum rent. here the landlord might give you a chance to recover the short workings that you incurred. Yeah. So in the next year, maybe the actual royalty of the landlord is supposed to be like 2 million. But remember, in the previous year, you already made a short working of 100K. Yeah. So you can first deduct your 100K from the 2 million that he's supposed to receive, and then you give him 1.9. Yeah, and that is what we call recoupment of short workings, which is the same as recovering short workings in a period where the lessee attains excess in royalty over the minimum rent. So those are the three terms in royalty accounts: minimum rent, short workings, and then recoupment of short workings. Yeah. Now let's look at the types of recoupment period or condition. Recoupment of a fixed period from commencement of a lease agreement, then fluctuating rate of recoupment of short workings. Yeah, so the two types of recoupment period, it can either be fixed or fluctuating. Yeah. Then let's also look at a subleasing. A subleasing, a remaining leaser or parent holder sometimes gives to the lessee the right to sublet part of the land or right to sublease, and on the exercise of this right, three parties come into existence: the leaser, the lessee, and then the subleasee. Here, the tenant is also given a right to give another person that right. Yeah, like you rent someone and you also give them a right to rent. Yeah, and that extra person is what we call the subleasee. Yeah. A remaining leaser or patent holder sometimes gives to the lessee the right to sublet part of the land or right to sublease, and on the exercise of this right, three parties come into existence, and that is the leaser, lessee, and then the subleasee. Yeah. So now let's look at the accounts that are required and their purposes. Yeah. The following are the different accounts opened in respect of royalty transactions. First, we have royalty payables account. Yeah, royalties payable account. This shows the royalty on actual extraction or production for the period. Yeah, being the total of the tenants and subtenants production. So it shows the actual extraction or production for the period, the royalty payable account. Then we have the landlord or the leaser's account. This shows the actual amount paid to the landlord for the period, which may be the minimum rent, or if more, the royalty payable less short work recouped. Yeah, it shows the actual amount that is paid to the landlord. Then we have the short workings account. Short workings account, when royalties are less than the minimum rent, this account is debited with royalty on short workings. Short workings, it's regarded as an expense. Yeah. So we have mainly three accounts. We have the royalties payable account, the landlord's account, and then the short workings account. Yeah. Then accounts for subtenants. This is where a subtenant is advisable to open further three accounts corresponding with the three mentioned above: royalties receivable account, subtenants account, and then short workings account. Yeah. Now let's look at accounting entries. The following accounting entries are made in the royalty account. Yeah. First, when there is no provision for minimum rent, for royalty based on production, when there is no provision for minimum rent, we debit the royalty payable account, then we credit the landlord's account. And when cash is paid to the landlord, we are already spending. Yeah, so we credit cash. Cash is reducing, and the landlord is what? The landlord is regarded as a creditor. Yeah, and credit is reduced by debiting. So we debit the landlord account and we credit cash account. Yeah. Then when there is provision for minimum rent, for royalty based on production, we debit the royalty payables account and we credit the landlord's account. Then short workings to be received in future. Short workings to be received in future, we debit short workings account because short workings an expense. We debit short workings account and then we credit the landlord's account. Then for cash that is paid to the landlord, we debit the landlord's account and we credit cash account. Then in case of short workings recoverable, if any, short workings recoverable, it's like recouped, we debit the profit and loss account and then we credit the short workings account because short workings are expenses and they reduce by crediting. So we debit profit and loss account and we credit short workings account. Yeah. Then when royalties exceed minimum rent, it means that no short workings will be what? Incurred. Yeah, so when royalties exceed minimum rent, first, royalty based on actual production, we debit the royalty payables account and we credit the landlord's account. Then short workings recouped, if any. Recouped is like recovered. Short workings recovered, we debit the landlord's account because we are getting the money from what the landlord is supposed to receive. We deduct the short workings that were incurred. So we debit the landlord's account and we credit short workings account because short workings are expenses and they're reducing. Then for cash paid to the landlord, we debit the landlord's account, we credit the cash account. Yeah. Then for cash paid to the landlord must not be less than the minimum rent. Yeah. Cash paid to the landlord must not be less than the minimum rent. And in case of the short workings, irrecoverable because sometimes some short workings are not recovered. Yeah, so we debit profit and loss account and we credit the short workings account. Then let's look at the entries in case of a subleasee account. The first one is royalty payable on actual production. Yeah. Royalties payable on actual production, we debit the royalty payables account and then we credit the landlord's account. Then royalty receivable based on subtenant's production, we debit the subtenant's account and we credit the royalty receivables account. Then in case of short workings recoverable in future by the subtenant, we debit the subtenant's account and we credit the short workings account. Yeah. Then for royalty payable to tenant on subtenant production, we debit royalties receivable account and we credit royalties payables account. Then for profit on subleasee, we debit the royalty receivables account and we credit profit or loss. Then lastly, short workings irrecoverable by the subtenant, we debit short workings account and then we credit profit or loss. Yeah. Thanks for watching. Don't forget to subscribe, like, comment, share with your friends and watch my next video. We shall be having various examples about specialized accounts.